All right, ladies and gentlemen, MrSotko here. Welcome back to the channel. Got a whole bunch of good crypto news stuff for you today. And the first thing I want to talk about is that Facebook CEO Mark Zuckerberg to be grilled in front of Congress over their Libra Facebook coin. And for a while, it was that David Marcus character for like a couple months there was just being grilled in front of Congress, etc. And apparently that didn't go so well because, well, they didn't get any kind of regulatory approval or didn't really satisfy anybody's mind because Facebook is terrible and they're not to be trusted and steal everybody's data and have done this over and over and over. And now they're coming out with Libra crypto, which will be a stable coin and be linked to, well, like 20 plus super high corporations. That's definitely a cryptocurrency I can trust. So the House Financial Services Committee announced Wednesday that Zuckerberg will testify on October 23rd during a hearing entitled An Examination of Facebook and Its Impact on the Financial Services and Housing Sectors. Wow. Even the housing sectors they're throwing in there. While details were sparse, Wednesday's press release noted that the committee chairwoman Maxine Waters has drafted the Keep Big Tech Out of Finance Act. Previously, Waters had called for Facebook to halt development of Libra until lawmakers' concerns were addressed, which is going to be hard for Facebook to do because nobody trusts Facebook, even though like everybody still uses it. One of those things where you're kind of like addicted to it, I guess. I don't know. Like, there's still so many people on Facebook. The draft legislation prohibits large platform utilities like Facebook from becoming chartered, licensed, or registered as a U.S. financial institution. The bill also prohibits large platform utilities from establishing, maintaining, operating digital asset that is intended to be widely used as a medium of exchange, a unit of account, store of value, or any other similar function as defined by the good old Federal Reserve, our overlords, who know better than we do and know better than Facebook does. Now, again, I'm kind of at a catch-22, double-edged sword kind of thing here, where like on one end, I definitely don't want Libra to be a thing. Because with their, upwards of 2 billion users, although some of those might be bots, etc., some people like to point out, let's go with that. That's going to make a lot of people buy into it for their games, for Uber, for all these different corporations, but you're really just fueling these corporations, which is like the exact reason you get out of the fiat money and into cryptocurrency at some point. Maybe it's just for the money. Maybe it's for that altruistic reason of getting away from the corporations, Wall Street, the Federal Reserve, etc. And that kind of defeats all of it, really, because it's not just Facebook's coin, right? It's not just Facebook's. Like, that might not be so bad if they were like, hey, we're going to make a platform token, and you'll be able to buy all your favorite stuff on your farm or whatever, like in your game farm. Do people even play that anymore? I don't know. Is that a thing? But either way, like, the games on Facebook. Okay, fair enough, right? Everybody has, like, a token these days. But then it's like, oh, no, we're partnering with MasterCard and Visa and PayPal and Uber and eBay and like all these gigantic corporations that some of them are okay, but again, it just means that there's a lot of shady activity going on. So they're all paying $10 million to run a master node. Okay. And then they're going to get interest from these stable coins, which obviously there has to be some kind of lending going on because there's interest on stable coins now, but there's lending going on. So if you get a few percent interest on some stable coins or something like that, obviously they're giving them out to people. They are lending them as loans. So if there's no loans with Libra, where is this money coming from? And it's likely because they know that they're going to make a lot of money. They know that if you buy Libra, the average person buys Libra, they're going to spend it with Uber, they're going to spend it on eBay, they're going to spend it at these corporations, so they're going to make more money. That and foremost. So $10 million drop in the bucket for that. And two, it's almost certainly that they're going to all have your data. They're all going to share this big data pool of who's buying, when, where, how, and it's going to give them a lot more information than just swiping your debit card or something like that. Okay, there was a sale over here, but we don't know who made that sale. We don't have that information. And then you can go on Amazon and you can, you look around and then you'll notice those ads on Facebook where if you just looked at camping tents, oh boy, howdy, there's some camping tent ads on Facebook. So again, it's just going to be more data for them to push things, which could be a good thing or a bad thing. But either way, I will make sure to make a video about that good old hearing. I'll try to find the good parts of it. Because I'm sure it's just going to be great. Because doesn't Mark Zuckerberg look more and more like a robot every day? He's so weird. He's like, hey, Mark Zuckerberg, your skin is kind of turning orange, and I think they need to replace the shell on Zuckerbot. Because like I think what happens is they put like real human flesh on them. Where they get it, who knows, right? It's a corporation; they can do what they want. Trust me, they like if you're as big a corporation as Facebook and you're like, what could I use right now? The Zuckerbot seems to be scaring all the children because it's steel like a Terminator. Let's get some human flesh and put over it. All the executives are like, where are we going to get some human flesh? One executive raises his hands and is like, hey, I recently went to this random country. I bet we can find some human flesh there, right? We could just bring a couple $100. We can find some human. You want some human flesh? Facebook will find you some human flesh, okay? And you need to reskin the Zuckerbot because it's starting to look pretty gross. Moving on, Bitcoin price likely to break out alongside S&P 500, says Tom Lee, the guy that is literally always wrong. However, in this case, I'm reading this article because it does make a lot of sense. While the largest cryptocurrencies prove to have a low correlation with traditional markets, a stock market rally could add to the overall confidence of investors, and that might be a boost for Bitcoin as well. And I agree, because you got more money and you're selling or something like that, maybe you can get into Bitcoin when it's lower after you just sold your nice stock and ride it up. Which I'm surprised not more people do. And there isn't a lot of stock exchanges that hold Bitcoin. They're starting to, and there's been a few that have come out like that, but there has been some stock exchanges that have been, like the internet stock exchanges for quite a while. I remember the commercials even back in the late 90s or early 2000s, about Scott Trade and only $9 a trade online or $7, whatever it is. The problem with those exchanges is that not like $7 or $8 a trade or whatever it is really, really expensive. Imagine if you had $1,000 in Bitcoin and it went up a few $100 and you want to sell it. You probably would barely make profit or none at all. So that means that you have to sell very high and have a lot of money. So it's really not for the small people. And since they haven't really added Bitcoin and stuff to those exchanges, again, some they have. And that would be a huge thing for Bitcoin, because if your stocks are all in the red and Bitcoin is in the green, well, you shouldn't buy when it's totally going up. But you get what I'm saying here is that, hey, well, maybe I want these 10% daily gains as opposed to my stock basically sitting in the same place for years and years. I read an article the other day that said if you had invested $1,000 into Google in 2001, I think, how much would you have today? And it piqued my curiosity, so I clicked on it. It was probably clickbait. And it said you'd only have $4,800. And I'm like, wow, that's awesome, great. 4 times your, 4 or 5 times your money. That's great. Don't get me wrong there. I would certainly like to take my $1,000 and then have 5,000, but that's like 18 years later. And that's not a lot compared to Bitcoin. If you had bought in 2009, well, let's just say you're pretty good. So Tom Lee says, we expect S&P to break out the upside, and this would enable Bitcoin to break out as well. While many expect a recession, U.S. has been stubbornly resistant, oversold, and sentiment cooled off on Bitcoin, which I kind of agree with that. I think it was oversold. I think getting down to 7,700 or 7,800 was a little bit too much, and we sort of spiked back from it. Another person says, equities at near all-time highs, bonds all-time highs, real estate all-time highs, venture capital all-time highs, precious metals multi-year highs, all made possible by QE, quantitative easing. I don't know if that's a joke or not. A compelling argument can be made that BTC is the most undervalued asset in the world today, which it may very well be after getting to 20,000 and then dumping all the way to 3,000 and then now back up to 8,500 or so. it could very well be incredibly undervalued. I think the world has yet to see the undervaluedness of Bitcoin, in the sense that there's only 21 million of them, and there's way more than 21 millionaires to buy, like one a piece and have, and be in the 21 and be in that 21 club, or the 2.1 club maybe. But either way, it just goes to show that there's just not enough Bitcoin for everybody in the world. And the only problem I see with Bitcoin is its scalability, of course, and that's a problem with a lot of coins. Even Ethereum, the scalability is just insufficient, because if I was a developer and I'm like, well, I want to put this on there and it's going to require this many transactions, you can't do it because Ethereum is just not going to be able to keep up with it. So when Ethereum does scale, I think that's when Ethereum's really going to explode. I think Bitcoin needs to scale as well, but it is a tough debate, not one I'm looking to get into in this video. But Bakkt futures trading reaches peak. So back-to-back futures, that was a weird one. But at first, when they came out, they did not push much volume at all. It was like a few $100,000, and that's when the market dipped as well. So it was sort of the end of the month, the expiration of the CBOE futures. So maybe some people were trying to short it to get some more on Bakkt futures. But what I like to say is that would be a lot of effort just for a few $100,000 or so in volume in the first 24 hours. It wasn't much at all. I think it was under 1 million. So that would be a lot of work, to be totally honest, to like sort of crash the market with millions upon millions upon millions of dollars in Bitcoin, just to have a few $100,000 in volume on Bakkt. So I can't really blame Bakkt for the price, the dump recently, but CBOE futures is still a pretty mysterious thing that could very well be being manipulated. So Bakkt launched about 2 weeks ago, still has volumes below 9 million, with under 1 million on most days. On Thursday, Bakkt futures trading reached 1.93 million, a significant peak. The renewed interest happened after Bitcoin spot prices recovered to 8,600, with trading activity gaining to above 20 billion in 24 hours. Bakkt volume futures reached new daily highs with 1.9 million. The total volume still less than 9. So far, there's no strong correlation found between the futures markets and the spot market, because the launch of Bakkt futures coincided with with a deep correction of Bitcoin prices, as I was saying. But it was also at the end of the month, and the last Friday of every month is the expiration of CBOE futures. And again, those are cash traded. They're cash settled, not Bitcoin settled. So you basically bet with cash, you get cash. It's literally horse race betting for the most part. Is Bitcoin going to go down? I won. Is Bitcoin going to go up? I won, right? That's it. But that still doesn't leave out the fact that you could manipulate the market. If you had millions upon millions of dollars, you could buy a bunch of Bitcoin slowly over time. Maybe you already had it. And then you could dump it on various exchanges, lowering the price, fulfilling shorts, whether that's BitMEX or whether that's CBOE. It's really not hard. Set a short, dump a ton of Bitcoin. So you're getting all the money from selling the Bitcoin. Maybe you bought in a couple thousand earlier, so you're going to be fine no matter what. Dump the price just before the expiration, and then fulfill your short as well. Then you get a bunch of money from your gambling prize, effectively, and then you can do it again the next month. It's really not a hard concept to figure out, or to come to terms with. And it's also a hard concept to combat, right? Market manipulation with cryptocurrency, when half of it is fiat that you can track, and the other half is Bitcoin, Ethereum, Litecoin, private coins, stable coins, all things that are relatively hard to track. Now, Bitcoin isn't entirely anonymous, but it sort of can be if you trade your key every time, and don't let anybody know who your key is, like who represents your key. Like if you put your key out there and you said, hey, here's a tip or a donation, you know who that was from. So you just got to like switch it up all the time if you really want to remain reasonably anonymous, let's say. So Bakkt futures not doing too hot. Really, overall, very disappointing for how long we waited. Very low volume, but it is climbing, so we'll have to give them the benefit of the doubt for now. Moving on, IRS sets out confusing guidelines for crypto taxation. I know everybody watching is immediately falling asleep, but this is actually really kind of interesting. For U.S.-based crypto owners, the IRS set out its updated guidelines on crypto taxation. And get this, the IRS set out the usual rules for counting tax gains or losses when an actual sale occurs, capital gains, etc. Fair enough. For that reason, it's highly confused that coins received in a hard fork, even if not sold, would be counted as income. The IRS did spell out that only coins that are controllable should be taxable. What? What about, there are uncontrollable coins? I mean, maybe if a blockchain breaks, is that what they're saying? Like, if the blockchain is broken, you don't have to pay taxes? What? But anyway, the crypto community was still confused about the taxable value of fork coins. Did you remember to pay income taxes on these? Somebody says. The IRS suggested that tax is owed only when a user is in control of the coins. I get it, right, but that's still confusing and very vague, which means they have to split their coins in a new wallet, but there are multiple forks where the coins were never claimed. The hypothetical situation where forks are artificially created to force taxes on people is also discussed on social media. So what if you have the keys but no software from which to spend the asset? Number two, what if you never sell or transfer the asset and it drops 90% in value? Number three, so then you could get a big tax return by doing that, right? So if you claim all your shitty forks that come, because there's 100 of them from Bitcoin, there's just hundreds of them. Let's just be real here. And I claim all my shitty coins, let's just call them shitty coins, and you never sold them, but then you sold them 90% later. What if I claimed my coins now, really late, and I'm okay, I had Bitcoin when Bitcoin Cash came out, or let's say I had Bitcoin when Bitcoin Gold came out or something like that. I claim all the coins, and it's 90% less in value, so now I can get $48,000 on my tax return. Right, because I had so much Bitcoin back then and it lowered in value all the forks. Makes no sense. Number three, what's the value if the asset isn't even trading at the time of the fork? Again, so the IRS has no idea. I swear it's like they don't bother hiring anybody that knows anything about cryptocurrency. You could pretty much go on YouTube and find a YouTuber, even like me. I'm not saying I'm a taxation expert or anything. I'm just making a joke here, to be totally honest, but they would know more than the IRS, because if the IRS came up to me and was hey, we want to tax forked coins, I'd go, all right, well, I guess I can't really stop you there because you're the government. But may I have some more information? And they're no, that's it. You should pay your gains on your controlled coins, only if you control them. Right. So if you didn't, and then I'd have to ask these same questions that this person asked, that Jameson Lopp just asked. What does these even mean? So there you go. Good old IRS. That's all I have for you on that particular article, right? It's totally confusing. How do you even tax things that I haven't claimed? A lot of forks I never claimed. I'm sure a lot of people haven't claimed. Do I owe taxes on that? Do I owe taxes if I claimed it? Do I owe taxes at the claimed price or when I sell it? Or do I have to be taxed when I transfer it, or only when I claim it, or only after I sell it? Nobody knows. So moving on here, Bank of America's job posting hints at hired a dedicated Ripple specialist. So interesting news for all ye Ripple fans. According to a job profession on a professional social network site, LinkedIn, as of October 10th, Bank of America had stopped accepting applications for what it calls a treasury product manager for Ripple. This role leads to the product management team for the Ripple project, a decentralized ledger-based solution to cross-border payments marketed to GTS clients. The job description continues, the incumbent will be responsible for driving product strategy and growth, overseeing daily product management routines, and overseeing the development of new initiatives that result in an innovative and highly competitive product offering. So, Bank of America maybe picking up Ripple soon, or maybe just hiring somebody to see if it's a good idea or not. Well, we don't really know, but despite its size, the bank has traditionally been hostile to cryptocurrency, blocking account holders from completing transactions in the past year. That perspective seemed to get overhauled in 2019. BOA submitted a patent for a digital currency wallet in August. It joined R3's Marco Polo blockchain trade platform in September. The Treasury product manager candidate, meanwhile, must have experience in the payment sector. But cryptocurrency knowledge is not a specific requirement. It's never a specific requirement. We don't need you to know nothing about cryptocurrency. But could you work on this cryptocurrency for us? Okay. Moving on here, $229 billion market cap, 8,500 Bitcoin. So we had that pump, started the trade sideways. We got up to like 8,600 and then sort of dumped down. But interesting, both seem to be somewhat whale purchases though. So that makes me feel a little, because that's going to go down at some point, probably going to go up 1,000 or 2 and then dump by these equivalent little slashes here as somebody bought in a lot of Bitcoin at once. But for the rest of the market, kind of down-ish. It's sort of 50-50 at the moment, so nothing too crazy to talk about there. But that's all I have for you guys. Make sure you subscribe to the channel, like the video, share the video. Helps me out a lot. My social media in the description below. And as usual, I will see you guys next time.